Early exchange, shaping policy, advancing development.
It's early exchange on a beautiful Tuesday morning such as this. And of course, my name is Temple Bar. Welcome to the second half of the show. I do have my partner in progress and, of course, policy making in the studio. Uh, now you're the one smiling.
I just smiled. I wasn't blushing.
With me in the studio, and we do have in the studio, of course, a development expert, someone who is an international analyst in conversations such as the African Development Bank providing trade facility for the Bank of Africa in Morocco. And basically, the idea is to increase trans-border trade in Africa and to develop the economy of Africa. Let me let you know that we do have in the studio Mr. Sam Orovwuje. I'm struggling with the pronunciation.
Gee.
Orovwuje. Glad to have you on the program this morning. Glad to have you. Okay, so the AFDB for some time now has been putting their mouth where they're putting their money where their mouth is, and that is the continent of Africa. The whole idea is to develop Africa. And Mr. Sam, the last time we had you on this program, we're talking about the African Development Bank.
We're talking about the 60th anniversary.
Yes, yes. And so this trade facility for Morocco, but then first and foremost, let's get back to, some of the key challenges facing trade within Africa. Let's start from there to build this conversation. What would you say are some of the challenges, facing trade in Africa?
Number one is trade finance, which the African Development Bank is trying to address. With this facility, it's just extended to the Bank of Africa, with its headquarters in Morocco. It has over has over 20 branch network within Africa, and it operates in over 32 countries. So the idea of this facility is to expand the scope of intra-African trade with a view to providing some credit facility to enhance trade within Africa first and foremost, and improve on the volume and the level of credit that can be extended to those who are involved in trade. And the African Development Bank, within the strategic framework of 2063, trade finance is one of the core elements of its mandate. And the board of directors just approved this loan with a view to improving intra-African trade, particularly from the perspective of the African Free Trade Agreement that has been in place since 2021, to see how Africa can trade among themselves. So the challenge, number one, is finance, to extend trade facilities to small and medium enterprises in particular.
Now, the aim of this is actually to strengthen countries' diversification of production and competitiveness, while also raising additional tax revenues and creates new job opportunities. But let's go to strengthen countries' diversification of production and competitiveness. We know that the SMEs are the engine room of every economy. What would this do to the economies of Africa when SMEs have funds to support production? In Nigeria recently, manufacturers have been groaning because of the inflation rate. What would this do to a country like Nigeria?
I think with this facility, with the African Bank, what do you call it again? Yes, no, that's the lender. The lender.
African Development Bank.
That's the lender. Then those who are going to disperse the facility. That's
Bank of Africa.
Africa. Number one, in terms of small and medium enterprise, in terms of production and competitiveness, funding will be made available. Therefore, some of these small and medium enterprises are able to scale up their production capacity, their ability to export across Africa. So that's the major element in terms of this finance. And mind you, the projection of the African Development Bank and that of the Bank of Africa, once in the next 3 to 4 years, this 70 million euro will grow to a level of about 300 and something million euro. So when you're able to scale up capacity, then you're able to energize and reflate the economy and becomes more beneficial in terms of economic growth and development across Africa.
So yes, we've been talking about SMEs, as the engine room, but then we also have integral issues, basic issues that have affected the growth of small and medium enterprises. And despite the efforts over the years by the African Development Bank, we've still seen that sector, stalled. What can be done to improve or to drive, the small and medium enterprises? Because if that's where we stand to benefit from, like the trade facility, that it be directed towards improving that sector, so we have more people, having funds to, grow businesses.
I don't think small and medium enterprise in Africa are stalling. There's been a remarkable improvement, particularly from the point of view where there are support, particularly credit support from development banks. But mind you, that's not to say all is well, but then we can expand the scope of facilities so that they can do well. But another major impediment to small and medium enterprise in Africa in particular is lack of collaboration among small and medium enterprise in terms of collaborating to assess credit facility as a group, taking a common insurance scheme, looking at product development across various sectors. So those are some of the impediments. But in terms of finances, there have been remarkable improvement. Even in terms of exporting your commodities within Africa, you can be paid in your local currency. And I think the idea of some of these banks, particularly Development Bank, is to scale up this process so that we can energize our sector with a view to improving on the economic prosperity for Africa.
Now, if we look at competitiveness of SMEs in Africa, there are some factors that challenge that. Some of them is the importation of many products that this SMEs are also producing. There seems to be a strong competition within locally manufactured goods and foreign-made goods. With this facility, would that change the narrative, or there are other things that should be done in addition to trade facility?
I think the concept of protectionism in international trade comes to mind readily in this conversation. For you to be able to scale up small and medium enterprises, you need to protect those industry within Africa. So the various, at the continental level, we have the African Continental Free Trade Agreement. So that's on the one hand. On the other hand, countries within Africa must find a way to protect their industry so that small and medium enterprise can thrive. Once you allow a lot of dumping to happen in Africa, then the growth of small and medium enterprise become a major challenge. Furthermore, we can find a way to see how, even as citizens continentally, to see how we consume made in African product so that you can scale up the activities and you can grow that sector. So on the one hand, a policy framework in a sustainable manner will protect those industry. Then even as a collective, as a people in Africa, we must consume what we produce. And we can just take a lesson from India that has a policy framework in place. Make in Indian good has become a very strategic framework for people to consume what is made, and you encourage some other people to come and invest in the country. That will scale up. So this facility, to a very large extent, will grow that sector.
So it's still going to the facility by the AFDB. Is it possible that it's going to bring about an integration in the economies of Africa?
That's the essence. When you talk about intra-African trade, that will improve on the development of Africa. So if we are able to scale up trade facilitation, trade services across various countries in Africa, that will improve on development. So once you're able to trade freely, then there's more economic prosperity, there's more money changing hand. Then in terms of product development and product standardization, it will improve over a period of time.
Just to add, some of the recent political developments and upheavals we've experienced in Africa, especially in the West African sub-region, as a result of coups and military interventions, you don't think that's going to have any negative impact on, trade agreements?
Countries will try, in spite of political tension, all over the world, you have one form of tension or the other. So what is important is the managers of those resources, and when those resources are deployed appropriately to what they are meant for, then I don't think those tension will tangentially affect development. There are always tension. So there's a point of equilibrium in the international arena where, in spite of those tension, things will constantly move. Look at the Gulf states that we spoke about yesterday, and the Middle East tension. The IMF is promising that things will look good in spite of the challenge in that.
Are those not speculations? Would you really take the word for? I mean, you're seeing the aggressions and all of the issues going on in the Middle East. That
speculation. Some of those data-driven reports on rating agencies speaks to the fact that there are greater opportunities and the economy will grow by 4.4% between now and next year. So if you look at data, and those data are reliable data, then I don't think there's any problem with that.
So Africa is said to face significant trade finance gap, estimated to be up to 71 billion euros. This plan or this trade facility that the AFDB is giving to Africa through the Bank of Africa is expected to catalyze a 300 million euro economy over 3.5 years. So if Africa is estimated to have trade finance gap of up to 71 billion euros, that seems a long way to go. And if in 3.5 years, it's this 70 million euros can help catalyze a 300 million euros economy. What more needs to be done to ensure that over time, that 71 billion euros trade finance gap is bridged? This seems to be like maybe a bucket in a very big pool.
I don't think so, in my view. If you disaggregate the figure that I just mentioned, that's slightly a quarter of a billion euro. So if somebody is going to provide almost something that will bring us to speed in 3 to 4 years. Mind you, it's not only the African Development Bank that has initiative for trade financing. There are other financial institutions. The African Export-Import Bank is there providing some incentive in this area. So if we aggregate some of these development banks and some other banks that operate within that ecosystem, I'm sure that gap within the next 5 years, we'll be able to bridge that gap. But mind you...
Isn't that overambitious, from a 300 million euros in trade over 3.5 years to actually closing a gap of 71 million
this is just one
euros.
sector. Let's be clear in our mind that the African Development Bank is among other banks, development banks, that are responsible for trade financing, extending trade credit. So you have the African Import-Export Bank that plays in that sector. Then you have other development banks who play in that sector. So if we aggregate some credit facilities for trade in that area, then this gap that we talk about over time will be cleaned out. So it's not to say there are no challenges, but if the rich sectors continually lend to those who are into trade financing or trade, then that gap can be closed. So let's have a feeling that some other bank will take initiative from what the African Development Bank has done, extending a reasonable credit to the Bank of Africa, domicile in Europe. And mind you, that bank is operating in about 20 African countries. And if these loans are disbursed appropriately, I'm sure that will scale up trade, particularly within the premise of small and medium enterprise.
Let's look at the role of microfinance banks within countries in closing this gap. They are the closest to SMEs than even the commercial banks.
No, they are playing their role, and they lend to those who approach them for lending. So a lot of those businesses depend on even the microfinance bank. So I can tell you for a fact that if not for the microfinance institutions, some of those businesses that play in that sector will have had a major challenge in coping with production and staying competitive wherever they play in that industry. So they play their role, but the gaps will always be there. And mind you, a lending institution has to safeguard those funds. So it's not just that
They give you money.
yeah, you must give the money. They must secure those money because those monies are deposits from people, and deposits are supposed to be paid on demand for those who have deposited those money. So there are gaps. So they must do their credit due diligence. They are supported by credit bureau who provide some rating and some due diligence on the background, so that when you put your money in that space, those money don't just go down the drain.
So
And some banks,
wouldn't you say there's some stringent, the measures that have been put in place are a little bit stringent?
no, you must put some mechanism in place to safeguard your money. So once you meet all those requirements, the bank has a desk that supports you in terms of how you manage those loan portfolio. So if there's a run on some of these lending institutions, every other person will be affected as well. So you must strike a balance between the lender and the borrower. So once there's a mismatch, they say in credit, there's a problem and you have a run on the banks. And that's what happened in the early 90s and some early part of 2000, where Soludo has to recapitalize the bank. And there's a process to recapitalize the banks so that we don't have challenges in terms of liquidity and some other things that you need to thrive on as a nation.
Now, it's one thing to have access to trade finance. It's another thing to look at the cost of that trade finance. Isn't that a challenge as well to the SMEs?
I think the cost at which the Bank of Africa is taking this credit from the African Development Bank, the digits are very low.
I'm directing this to the microfinance institution, looking at the cost of fund or the interest rate that applies when loans are given. If we're looking at closing this gap in addition to what the AFDB is doing.
No, I understand that you cannot operate beyond the regulatory framework. So if you go to the market, you take a cost of fund that is relatively high. Therefore, you borrow at that rate. Then you look at all the elements in terms of interest rate, your cost of production, your operating expense. At the end of the day, it's the consumer or the customer that suffer where these cost elements are transferred into the product. And that's why you're talking about a high rate of inflation, because the cost of goods and services have gone up based on the cost of production. So it's the responsibility of government in terms of monetary policy and fiscal policy to see how they can strike a balance so that we can lend minimally at a low interest rate, particularly a single-digit interest rate, so that once you're able to lend to the productive sector, particularly small and medium enterprise, then the cost of production, once that is managed, reasonably well, then the high cost of goods will equally be given to the customer at a reasonable low price.
So trade financing would lead to increased trade. That's a given.
Yes, it is.
Now, could you speak to some of the potentials, some of the benefits of increased trade, you know, in Africa, and of course the development of Africa, the economy of
Yes,
Africa, and the
it
development
will
of
enhance productivity. And once there's productivity in a given economy, that will translate to the gross domestic product, and that will improve on the economic prosperity of citizens. So, therefore, you have economic growth and development as the element that come from the improvement in trade.
So this partnership between the African Development Bank and the Bank of Africa, for some, it's news that there's actually a Bank of Africa domiciled in Morocco. What do you see this partnership producing? And should it be like this for more projects? There have been other projects by the AFDB where it goes through an agency of government, but this time, because it's trade finance, is going through the Bank of Africa. Now, for some other projects or investment support that the AFDB wants to offer, should it go this way too, using the Bank of Africa as sort of the middleman in this?
No, it's the Bank of Africa had approached the African Development Bank to extend credit facility to enhance its trade financing. So that's just one of the core elements beyond consumer banking, loans and deposit. There's a desk for trade finance. So they want to improve on the sum aggregate or the aggregate of what they lend to trade in Africa. So there are other service providers. The African Import-Export Bank that I mentioned earlier has equally given some trade facility. Even the Dangote refinery in Nigeria got a lot of financing, trade financing from the African Import-Export Bank and some other development bank. So this is just in the news as a major component of a recent decision by the African Development Bank, credit that was just approved, 70 million euro to the Bank of Africa to enhance its trade financing, particularly in 20 countries within Africa. And like I mentioned earlier, they have operation in about 32 countries across the world. So that will improve. So if you look at the segment or the ratio of what comes into the branch network within Africa, and they're able to finance intra-African trade and take advantage of the African Free Trade Agreement, then that will scale up trade in Africa.
You said something about microfinance banks that I would want to relate to, the Bank of Africa headquartered in Morocco. You talked about, monitoring some of the facilities and loans that have been given to SMEs, to ensure that they're used judiciously and to recoup as soon as possible when asked. Now, there's also that issue on a larger scale. It's not enough that the AFDB has released funds. How can the Bank of Africa efficiently and effectively, deploy these monies to the economies that are needed, and of course, to ensure that the idea of even getting these trade facilities put into use? What are the measures that need to be put in place?
The African Development Bank has what I might call a watertight mechanism in terms of recovery of loan, securitization of those facilities. They don't lend to people where they cannot get their money. So the ratio of what you might call doubtful loans or facility is almost near zero. So there's an ecosystem that supports the evaluation, and there are desk officers that are responsible within those banks that see that these loans go into the appropriate sector. And if you look at the balance sheets of the African Development Bank over the last 10 years, the assets and liabilities have always been in good shape. So in that regard, therefore, in terms of using those loans appropriately and getting those loan backs into the African Development Bank is almost watertight. But if you look at it from the point of view of other lending institutions, the framework might be different from the approach of the Development Bank.
So if you look at this facility, it comprises of a risk participation agreement, which means that the Bank of Africa will also share risk with the AFDB, and it is also a trade finance line of credit, which will make it possible for other international businesses to benefit from this. How do you see this agreement? Do you think it was properly thought, and the way it's shared, that some other SMEs get to benefit from the huge chunk of it, but other businesses also get to pick from it?
One of the principles of credit management or credit risk is to be able to share your risk across various layers. So when you share risk, then you minimize the risk that you will bear as a single institution. So that is part of credit management or credit administration. So that is in line with a credit framework, even whether it's commercial banking, whether it's microfinance, whether it's fintech. So those elements are critical in terms of safeguarding the fund in its first instance. Then part of that credit, beyond just favorable to African countries, there are other international institutions that we provide trade finance in terms of import into Africa. So you must find a way to balance the lending regime so that you can secure that loan.
Well, the African Development Bank, 70 million euros made available to the Bank of Africa to improve trade. I mean, that's what the trade facility is about. And I dare say they've been saving Africa since the 1960s. At this point in time, do you see Africa actually developing? I mean, with all of the facilities put out, and it just feels like it's time for us to shine. Countries need to take advantage of the moment and, start trading amongst ourselves, improve the currency, which in turn will improve the economy.
Oh, yes. So the AFDB, kudos to the AFDB for what they're doing. I also believe that individual countries have the roles to play in terms of having policies and implementing policies that will provide support to the businesses. It is one thing for them to have trade finance, is another for the policy not to choke the businesses, because the government will gain more when the businesses thrive in terms of tax and revenue that it will get from the businesses. So if the environment is favorable for business, there is political stability, which some African countries are challenged with. And all of this happen, this political stability, the economy, there are no policies that stifle businesses. And that's there's protection given to local industries. They are not playing at expense, or business is not happening at expense of local business. We understand that there's competition. So for the businesses to compete favorably, they should have some form of protection. Here in Nigeria, we see buy made in Nigeria. But if the market is flooded for almost every product with foreign made goods, some that are even substandard, it poses a problem for the local manufacturers who have secured funds, some at a very high cost. So all of this needs to happen for Africa to reap the gains. Sometimes when you hear about the interventions of the AFDB and other banks, you wonder and then you look like, okay, by now we should have seen Africa at a certain level. But of course, it is not left only for the financial institutions, government, and the people to have a role to play.
Well, the AFDB continues to partner with states and countries in Africa in various sectors, and the latest of which is a partnership with the Egyptian Industries and the Chamber of Food and Industries, where they hosted an exclusive food industries investment forum in Cairo just yesterday, with the team collaborating for business development, which brought together top 30 and 35 Egyptian food producing companies. And I feel like that's the kind of collaboration we're looking forward to. And it's important that even Nigeria can take advantage of some of these strategic partnerships to see if we can, have an all-round development. We have the oil producing sector thriving, but then what about manufacturing?
The oil
What
producing
about
sector is it really thriving? Well, that's argument for another day.
subject to a argument? But then thriving in the sense that that's the money spinning industry. That's where revenue is generated the most, and it's imperative we start looking at other sectors. There's been a huge call for diversification of the economy, and I mean we cannot overemphasize on that anymore.
And one thing we cannot overdo is to sit here longer than this because we're already out of time. We thank our analyst, Sam Orovwuje, who is a public and international affairs analyst looking into the interventions, contribution of the African Development Bank to ensure the trade is facilitated and promoted across Africa. We thank you too for finding time to watch. You can do more by leaving a comment, sharing, so others who did not get a chance to watch the show can do so. I am Blessing AJ. Follow us on social media platforms at Sook News TV. I'll see you tomorrow.
Well, just to lend a voice to that, on behalf of everyone who has ensured that you can receive our scripts loud and clear, thank you so much for joining us. Later on, will be Market Inside. My name is Temple Bara. Bye for now.
Early exchange, shaping policy, advancing development.